With tax season approaching and crypto trading more diverse than ever, what do investors need to be across? I'm Charlie Sherry. Crypto Corner starts now. Today, we're diving into one of the most misunderstood parts of crypto, tax. From meme coin madness and DeFi complexity to lost assets and tackling returns, we'll unpack what really matters this tax season. Joining us is Patrick McGimpsey, Product Manager at Crypto Tax Calculator. Patrick's been in the thick of it for years, guiding investors and accountants through the tricky terrain of crypto taxation. Patrick, thank you for joining us today.
Hi Charlie, great to be here.
So crypto tax in Australia, before we really dive in, let's just do a quick refresher on how crypto is currently taxed in Australia and maybe if there's been any major changes over the past year.
Yeah, of course. There hasn't been any massive changes over the past year from the ATO, but just to give a quick overview, essentially the ATO treats crypto as a capital gains tax asset, so a CGT asset, similar to shares and property and that sort of thing. When it comes to crypto taxes, there's sort of two key components that we need to think about. So there's capital gains tax, and then there's also income tax. And when we're thinking about the sort of capital gains tax side, the things that trigger that are the sort of disposal of assets. So selling assets to fiat, swapping one crypto for another, swapping NFTs for crypto and vice versa, and then even potentially depositing into smart contracts as well. So there's quite a few areas that can actually trigger capital gains tax. And then income events are more things like staking rewards, sometimes airdrops as well. And in Australia, the income events can actually really get people unstuck because of the way things work. We can chat about it a bit later if you like. But on the whole, because of Australia's rules, it means that you have to be really on top of your record keeping. And with tax season coming up, now's the time to start thinking about getting everything in order and making sure you sort of know where you're sitting before June 30th.
Yeah, absolutely. I guess let's dig into some of those complexities. You mentioned DeFi is probably one of the most, complex use cases for retail crypto users and from a tax point of view. So how does the ATO treat common DeFi activities like staking and liquidity provision and lending?
Well, let's dig into it. So I guess there's sort of with the framing of these capital gains tax events and then income events. I guess on the capital gains tax side of things, like I mentioned, you've got swapping from one crypto to another that is triggering capital gains tax, and then so if you're using a DEX like Uniswap or something along those lines, you're triggering capital gains tax events. And when you're thinking about capital gains tax, essentially, you're taxed on the gain, essentially, from when you bought the asset to when you sold it. So just a simple example, let's say you bought some Bitcoin for $100 and, sometime later you sold it for $200 of Ethereum. You're actually taxed on the difference, and that's where capital gains tax comes in. Now, in relation to DeFi, it's not just swapping or selling that can actually trigger these events. You could actually, the ATO has provided some guidance around depositing into smart contracts, and those can actually trigger capital gains tax events as well. So potentially, if we take that same example where you bought $100 worth of Bitcoin and it's appreciated to $200, and down the track you decide to start participating in DeFi or something along those lines, you could actually be triggering a capital gains tax event and then have to pay tax on that $100 profit. So that's something to consider. And then on the income side of things as well, in Australia, you get essentially, these income tax events are sort of triggered when you receive the crypto into your possession. So if you receive like staking rewards into your wallet, they're treated as income using the fair value of the token at the time of receipt. Now, I mentioned you can get a bit unstuck with these sort of situations because, of course, crypto is volatile, and often staking rewards or farming rewards or interest are actually paid in crypto, and these are volatile assets, right? So just to make a really simple example, let's say you've earned some tokens through staking or farming or something like that, and at the time they landed into your wallet, let's just say they're $100, and you decide to, diamond hand like the good degen you are, and you hold on to those tokens and you don't sell them. Now, you have to report that $100 as income. But if your assets that you received depreciate in value, and let's say they go down to a value of $10 before you decide to sell them, you can actually, while you can essentially write off that $90 loss. So, obviously you've received them at $100, sold them for 10, you still have to report $100 worth of income, and that loss cannot offset the income, which is a bit of a funky rule in Australia.
Loss,
and I've seen quite a few people get unstuck with that.
Yeah. And as well, you touched on accruing staking rewards and that being taxable as income. In terms of capital gains events and disposals, if you take your Bitcoin to Ethereum swap example, and then deposit that Ethereum into a smart contract to start earning interest, can that deposit transaction in itself be a disposal and a capital gains event?
It can be, yes. So some of the guidance that the ATO has given is that if you're depositing into smart contracts, and there's some technicalities around whether you can actually show exactly, let's say you're depositing into a pool of assets and you're sort of commingling your assets with other crypto assets. There's an argument that you can't point to which crypto asset is yours, and therefore that's a disposal event. So you do have to be quite careful. There are obviously sort of T and Cs that tie into this as well. So each situation is unique, but yeah, it is definitely something to consider when you're interacting with these protocols.
Yeah, and another trend for this year that might be worth mentioning is meme coins. They've kind of exploded in popularity over the last couple of years. From a tax point of view, perhaps it's straightforward, but are there any considerations that people should consider when it comes to meme coins at tax time?
Yeah, definitely. I've dabbled in meme coins myself for the past year, which has been fun, but I've also started preparing for tax time, and it's quite messy. And I know myself and a lot of other people who've sort of dabbled with the meme coins, potentially you've made a big win and then you've sort of rolled it into another meme coin and done that sort of direct swap that we spoke about before, triggering a capital gains tax event. And then maybe the next trade hasn't gone so well, sort of leaving you with a loss. Now, the important thing to consider here is on that first trade where, potentially you've made a bit of money, you do have to you have triggered a capital gains tax event there, and there's going to be a gain that you're going to have to pay tax on. Now, if you've rolled it into another trade that hasn't gone so well, it's important to just be on top of your current tax situation before June 30th, because if that next trade or that next meme coin is sitting at a loss, you need to make sure that you're managing your tax situation correctly so that you're not paying money on a gain that you no longer sort of have. So yeah, that's sort of where I see people really getting unstuck. And on top of that, the speed at which people are trading these meme coins often means you've got quite a lot of transactions. So keeping track of them can be really difficult, and that's sort of where software comes in as well.
Yeah, for sure. And you talked about it there in terms of being aware of whether you're sitting on a loss at year end. So what approaches should investors consider? Can tax loss harvesting be applied effectively in crypto? Yeah,
in Australia, you can realize losses during the tax year and then use those to offset capital gains as well within the same tax year, and also moving forward. So the sort of important thing here is being careful of wash sales. Now, the ATO's sort of released guidance around cautioning investors to not participate in wash sales. And what a wash sale is, or what it could look like, is sort of like, say you're sitting on a meme coin and it's sitting at a loss. So you decided to sell the meme coin and realize that loss before June 30th. And then maybe on July 1st, you're like, okay, I'm just going to buy it back. And essentially, you've realized that loss, but you've still got exposure to the same asset. You've just sold and then essentially bought it back quite soon after. That is actually going to be considered as a wash sale by the ATO. And that is also considered, wash sales are considered tax avoidance in the ATO's eyes, and they can deny that loss. So it's really important to, really think carefully about what assets you do want to sell and realize losses on, because you can't just immediately buy them back. That's not permitted.
Okay. And talking about losses there, another prevalent issue in crypto is stolen crypto, lost crypto, scams, rug pulls, etc. Can investors claim deductions in these cases on their tax returns?
Yes. So you can, as long as you have sufficient proof in the ATO's eyes, you can claim lost and stolen crypto as a capital loss. It's really important that you have the required documentation. The ATO's got some guidelines around what you would need to prove, and it's important that you have those on hand. In the case of stolen crypto and that sort of thing, where there has been like an actual crime that's taken place, things like police reports and that sort of thing will weigh in there as well. So it's really important to just make sure that if you are going to claim lost and stolen crypto, you need to be very careful about your documentation. Have you followed the correct steps, and are you able to actually prove that it has been lost and stolen?
Well, lots to consider as we enter tax season. Thank you, Patrick.
Thanks, Charlie.
Just a quick reminder, this episode is for informational purposes only and does not constitute financial or tax advice. For personalized advice, always speak to a qualified accountant or financial advisor. This episode was brought to you by BTC Markets. This is Ticker, and we'll be right back.
You're watching Ticker. We'll have more in just a few minutes.